think if you think about stagflation, we're pretty much into one as we speak. If you characterize stagflation by a period of low growth and high inflation, the question around recession is not that we're not necessarily forecasting a recession. A recession is probable, especially in Europe, probably more so than in the US. But I think when you mention the word recession, people tend to associate that with 2008 and the crisis. We believe that a recession could be relatively mild, and therefore, in our opinion, is not a reason to be scared of that. It could actually be a healthy development, especially in the US, where the economy is overheating. And if you look at what stock markets are discounting at this level, this is the type of scenario that the market seems to be expecting. Obviously, if there were a significant recession, a crisis, then there would be much more significant downside. But in our view, a mild recession is already priced in. And so there is potential to the upside if this recession is actually even milder than anticipated or doesn't happen at all.
I want to talk through positioning then, because you are suggesting a modest but positive returns into year end. I think that would be a mild welcome versus all the volatility some investors have ridden over the course of this year. You also mentioned that you like opportunities in non-US equities, Europe and China you call out. There's a lot of sideways movement in Europe, so how do you position around European equities?
Well, so in European equities and globally, I think it's important to have a kind of barbell approach between and owning a mix of more defensive but also cyclical sectors. So on the defensive side, we very much like healthcare. You don't have so much of a tight correlation with yields, for example, that you can find in other defensive space. Valuations are also attractive. And on the cyclical bit, we like banks and we like industrials as well. If the ECB does indeed move away from negative interest rate, that should be helpful for banks. If, as we expect, there is no any severe recession in Europe, that should be also positive, not just for bank, but also for industrial. So it's that kind of barbell approach that we're trying to maintain at this point.